Hi, friends. Extremely heartbreaking, extremely frustrating, very brutal, unforgettable day. I mean, it's a really a forgettable day. Uh, it's very heartbreaking day today for the Indian markets. It's not that we didn't know this. We I made a video yesterday and probably I told also that we'll be opening gap down because uh, HS Nifty was showing around 170 points, 135 points down on Friday night, and we had a meltdown in US markets on Friday for which we were due to react. But the disappointment is because of three, four reasons. One, there was no recovery attempted at all in Nifty. It was extremely surprising. Yes, we were supposed to open gap down. We opened gap down, but it was a chance for the shorts to be covered. But nothing happened. I think only the shorts could have been added instead of getting covered. That means expiry could happen even at lower levels. And probably now we are going towards 22,000 kind of levels in Nifty. The reason is there are not even single signs of volatility. There are not even single signs of short covering. And probably the shorts are getting even more capitalized. According to me, today, as the screen was showing, probably some more short would have been added. So extremely disappointing day. The There was no attempt at all from I think either from the big institutions or HNIs anybody to even have those kind of buying which would have taken at least the Nifty to a at least some kind of recovery, 100 points and 120 points recovery. Nothing happened. Why? Another reason why we were disappointing today is that the edges Nifty was showing around 140 points down. That is the gift Nifty just showing it, but we opened even lower than that, which means we opened lower than the clues of the global markets. So we opened at around 190 points down, 50 points more. And we went even deeper, means we went to around 260, 270 points down when the Dow future was actually recovering. And by the end, by let's say around 3 o'clock or 3:15 or so, the Dow futures were up around 320 points and Nasdaq was up by around 110, 120 points, which means half of the fall which occurred on Friday, it was getting covered in futures today. But we closed lower than the edges Nifty levels by almost double. So if it was showing around 140 points down, 120 points down, we closed at around 260, 250, 260 points down. Which means if the global market is melting, we will melt more. That was a message which came from the screen today, and that is why it was very disappointing, disheartening, and FIIs have actually, make up their minds that this series they are going to clock the lower and lower levels. That is looking very sure now. It's very difficult. Tomorrow is a sensitive expiry. To tomorrow, yeah, tomorrow I think is a sensitive expiry. Oh no, it should happen on Friday nowadays because monthly expiries are all scheduled to Friday. So. Uh, Otherwise, the only hope now is that we have some kind of short covering expiry, and we again try to touch those 22 700 or to 800 levels. But as of now, the market is giving you a clear trade. Have a stop loss of 22,800 and continue short in the markets. Now this 22,800 will become, which was support, which we defended for 7 8 times. This will now become a resistance, and you can have any rise from even tomorrow or today's market is anyways over. Tomorrow, if you get any rise, you just short the market, keep a stop loss 22,800 and carry on with the trade. Now it's a very simple trade. It's because you've broken the very important support, and now we are at 9 months low. Now we have closing. Now we are hovering around the levels which we did actually a breakout from the election rally, 3rd, 4th June, which we had the breakout from 22,500 levels, because that time 22,500 was a big resistance for 3 4 months. If you remember, April, May, June, April, May, June, consecutively we had that upper resistance of 22,500, which we broke after the exit polls and later on after the election rally, which we had. Now we have closed or we have come very close to that kind of level now. So we are given all 3,000 points or 4,000 points that we did post the election. It has all gone and vanished. Now, so this was the reason for my disappointment. The only silver lining was Nifty Auto, which was trading in green, which gave a hope that yes, there are some buyers here and there. Everybody is not negative on the market. Another silver lining was the VIX. So VIX have been falling from last 5 days, which means the market is cooling down and a lot of probably the put and call positions are not being added, but we are near to expiry also. That may also be the reason that the positions are getting covered up. But at least the VIX was down. It opened around 7-8% up, but the VIX cooled off and actually is closing negative. So that was another silver lining. Uh, Third silver lining was that probably small caps and mid caps were better than at least Nifty. And fourth silver lining, I would say, was the Nifty bank recovery was pretty good. That we were 700 points down, but we covered almost 400 points and we closed around 320, 320 points down. So these were the 3-4 silver linings which I can see in terms of a screen. In terms of global indexes, dollar index is trading around 106.2. It's again a good lining, a good silver lining. It's a good, good trigger for the markets. The crude is still trading lower now, so it's come around $74 down. So that is again a good thing for us. Bond yields have also fallen down, so that's again a good thing. The US market futures was showing in green, which means they want to cover some of the losses which they did on Friday. So that's again a good news. See, US market, just remember one thing: the meltdown which happened on Monday or Friday, probably it was a overreaction or it was just a reason to fall because the markets have been rising so sharply for long time, or they were showing a lot of resilience because just because of that consumer confidence data, you should not fall by 700 to 800 points. And it's only that expectation, it just a study which is done by Michigan that what is the consumer confidence. It is not giving you any numbers as such. It is just a confidence which is being shown by the consumers and we've fallen so much. But if you see the GDP numbers of US, which are the real numbers, there is no issue. Even if you see the labor market, there is no issue. There are no unemployment rates are actually the problem is it's the reverse. The economy is strong. The unemployment numbers are actually coming down. If you see the last inflation report also, the unemployment numbers have actually come down. So probably it was an overreaction which will slightly get covered today and tomorrow and this week. It should get covered. But inflation is a problem in US. And that is why I say that US markets will probably have topped out and or they will remain very close to these levels now. The reason is inflation will create a worry for US markets. It will not allow those interest rates cuts and the kind of stimulus that probably Mr. Trump would have wanted to infuse in the economy to take the economy forwards. And with interest rates so high, around 4.5%, which for last 15 years in US or 10 years in US have been around 0%. Now it's almost 2 years plus that the interest rate levels have been so high, which is hitting their housing markets, which are hitting their some of the other market which are rate sensitive kind of markets. So that problem will still remain in US, and of course the overvaluation of US, which I don't feel comfortable at all. Those kind of things will still remain, but this economic related thing which we saw the fall on Friday, probably it was overheated, over exaggerated. That should get covered up. Why I'm saying this is because the Nifty IT has fallen today by 3%, let's say 2.7% by close. That should show a recovery. Nifty IT is now getting close well below 200 exponential moving average and it has still a weightage of around 19-20% in Nifty. So this probably, a rise in US markets today, if at all we close to what the futures are saying, you will see a respite tomorrow in the Nifty IT and that might take Nifty at least tomorrow to a certain level up. From there, you can short the markets and keep the stop loss at 22,800 until unless now we close decisively above 22,850 kind of levels. Till that, the market will remain sell and rise with a stop loss of 22,800 because the selling of FI is very, very intense and probably the buying is not there at all. There is no conviction in Indian to buy the stocks. That's the reason why I'm saying. I'm not saying the structure is bad. I'm not saying the valuations of India is not comfortable. I'm not saying the indexes are not good. Other parameters are not good. Everything is good. Everything is favoring for a long-term investor now to invest. If you have money, this is still the best time to invest. Nobody knows the bottom, but we are very, very close to a bottom. That is for sure. But markets generally don't stop at a particular bottom level. When they go up, they go much higher to their desired levels. And even if they're falling down, they will go to a level which is much lower than the desired level. Eventually, the market will fall, will make its equilibrium. But today, in this February series, will continue to go down because there are a lot of shorts in the markets and The FIs have a lot of advantage since there are no buyers. They're just riding the market with their shorts. So they are selling, they are booking their profits in the stocks, and at the same time they are able to book their profit in the shorts. Nobody else is short. Only FIs are short. Maximum shorts today are only the FIs. The HNIs are all long. Even the DIs are long. So, and we all know they punish these people very brutally. But otherwise, the texture is not bad at all. We all are looking very decent kind of valuations now. And in fact, one more news came from Citi, which has upgraded uh, the Indian stocks. It's upgraded the Indian stock market to an overweight from neutral. So if the big brokerages are now overweight on India, and they have actually, except for China, they have downgraded all the Asian markets. So that is again one good thing, that all the foreign brokerages are also thinking that probably the levels have come very close where the bottoms, or let's say the valuations have become slightly attractive as such. But not will depend on how the GDP numbers come, and we'll see how it happens. So coming to our markets once again. So in global terms, since I made the video yesterday only, so I'm not repeating many of the things. But we'll see how the markets pan out today in terms of US market. Probably they should at least close in green, and I'll not be surprised if they cover at least 50% of the losses in last 2-3 days, which they did. I think they fall around 450 points on Thursday, and around 750 points on Friday, which means around 1100 points down. So I will not be surprised that the market closes around 350 points or 400 points up today. So they cover around 33-40% of the losses which they were in last week today itself, which should give a boost to our Nifty IT. But coming to our markets, which is very essential in terms of understanding the markets, the texture, etc. See, valuation point of view, I've already spoken a lot of times that we are much closer, or let's say below our 10 years of average earnings, average valuations. But the problem is, what is the growth and what is the earnings growth the market is expecting? See, there are two reasons of fall. One is relatively the other markets are good and we'll sell India. Then there is no issue because the fundamentals are good. Someday or the other, we'll see the buying. Yes, we have to bear this temporary pain, but someday or the other, we'll have a buying and we'll again form an equilibrium. If that is the reason, which I showed you the numbers also, I probably told you the numbers on Friday also, that $32 billion have gone to France because there's a lot of buying, because they're increasing their defense budgets, and Russia-Ukraine war is slightly coming to a close. So European markets are globally closing at all-time highs. $10 billion have gone China because of deep sea thing, and the mouth-watering valuation which China has. Even Brazil has got around $1.5 billion of money inflow. So there have a lot of markets which have got inflow from the FIAs on the cost of India. On the cost of India. So it's probably the relative of performance which they are seeing in other markets for which they are selling in India. And the problem is, selling does not hurt to FIs because on demat accounts they are selling their shares and they're booking their profits because they have taken their shares at much lower prices. And at the same time, they are short on the market, so they get a lot of profit from the shorts. So it's actually win-win for them. They are changing the hands in India by booking profit, and they are going in other markets and buying at cheaper valuations, and then they'll earn profit there also. And that is my biggest problem with our DIs, the retailers, that we don't have the force, we don't have the guts, we don't have the conviction, and we don't have the money power and muscle power to actually eradicate this one-sided system of FIS. Until this time will continue, they will not be hurt by keeping these shorts, they will continue to play with our markets, and that is what they're doing. Anyways, we can't change all these things in a single go. I think one more report came from Warren Buffett. He is now sitting at 28 lakh crore of cash. Can you imagine? It is 10 times of our GDP, or at least 9 times. He's sitting on this much amount of cash, which means he's extremely pessimistic on US. And he's saying the valuations of all the markets are pretty high. He's only seeing some opportunity in Japan. And see, he's listed down some 5 companies where he's investing. Otherwise, he's entirely sitting on cash. The highest amount of cash the person is sitting on ever in his history is now. That shows his worry. But he's a very investor, so probably he will only invest when the chips are down. That's the time when he tries to invest the money, and he's probably very happy to put the money in bond markets. The returns are anyways 4.5 to 5% without any risk. So that's a beauty of US markets now, that you are getting a dollar return of around 4.5 to 5%. Now coming to our screens. So what we would have wanted today was that we had a good breakdown today. We were opening lower, but we wanted to at least see 2 or 3 times of recovery. Still, we would have closed in red only because the selling of FIs is very intense. But at least 1 or 2 attempts of recovery, that was not there. And that was actually disheartening. And it is showing that probably now 22,800 will act as a resistance, and we're moving towards 22,000 now. Until unless this probably stop loss gets hit and we close above that, we don't know when it will happen. But as of now, the screen is not telling anything of that sort. Otherwise, all the parameters, everything is looking bullish, but not this. The only silver lining, which I have already told you, that some of the sectors are doing good. The border markets were not so bad, but DIs are continuously buying our markets, and probably whatever steps have been taken by our government will show some kind of fruits later on, and the kind of upgrade that probably City has done, that is also a good step. The problem is March month also. See, February we are closing in red, which means we have broken the record of last probably 40 years now, because last time we had fifth consecutive series negative in 1994. So that's around 41 years, 42 years. So we'll be breaking the record of last 40 to 43 years now when we closed in red. And the problem is March month has never been good for last 2 3 years, because people try to sell their stocks to cover their income tax, advance tax compulsions, and it's a year-ending thing. Nobody wants to take too many positions, etc. All those things. Probably 12th March is the date when those steel and aluminum tariffs will be becoming due. Canada, Mexico also 1 month, which Mr. Trump gave to them, will be getting over. 2nd April, anyways, the world is waiting for how much tariff will be announced on which country, etc., etc. The market will remain nervous. So I don't think on the index level we'll find anything good in March month. Also, we might get some rebounds here and there, 500,000 points on some news. Otherwise, a big recovery generally does not happen in March. It might surprise, yes, it might surprise. But anyways, we'll play accordingly. As of now, just like we're saying that we're playing a sell trade by 22,800 profit, if 22,800 stop loss. If at all the trend changes and we start closing about 23,000, then we'll have a reverse trade also. As of now, that's not looking to. That's another thing. And one more news which came in the yesterday or day for yesterday was that Zelensky is ready to close the war with some conditions. So I think that is a given now that this war will get closed, because Zelensky has hardly any choice, and probably he's also saying that after the war is happy, he's ready to go for elections, and he want to wait for a mandate from the people in terms of whether they like him or not. So that's a small country, nobody's interested, but the war is coming to a close, that's for sure. That's pretty much for sure. So all the other external factors are looking extremely good, except for only one point, which is this FIA selling, and it is really really huge now. Let's see the figures today. How I would just like to see that probably if at all not no more shorts have been added, then also we'll be very happy. But if at all the shorts would have been added today also, then we are going to at least we are going to 22,000. That's looking like that, which will again become a tempting level. It will be a mouth-watering level, but as of now, we have to bear this pain. It's not looking any respite, because our DIs have no spine, no back, nothing to counter this ferocious selling of FIs, and that is what really hurts me. At least we're giving them a lot of money in terms of SIPs. We have insurance money. We have insurance. We have PF funds money. I mean, punish these people. If at all we don't punish these people, they will always command us in this position until unless they have those kind of shares in the demat accounts. But anyways, it does not happen like that, and we get continuously bruised, which is sometimes heartbreaking. So this was the thing. Market is extremely negative. Markets are not looking good at all. Whether we can expect a recovery? Yes, we can have some dead cat bounce here and there. Tomorrow also can a bounce is expected? Yes, a bounce is expected, but it will be a bounce to actually sell the market for the stop loss of 850 or 800. Until unless we close decisively above 22,850, then only the texture can change and we can have a reverse trade. Until then, it's again a sell with 22,850 kind of a stop loss. That's what I would recommend. That's what the screen is saying. With this, I just end my video today. I hope you liked the analysis. Thank you so much for your time.